How was your week?
Week was pretty good.
How's the tricep coming along?
Good. Go see a surgeon tomorrow.
Yeah? They're going to cut it off?
Hopefully not, but I think so. I think I'm going to get a robot arm, though.
You're going to get a robot arm?
Yeah, I'm pretty sure it's going to be like a shopping spree. They're going to give me a catalog and pick up the kind of arm I want.
Nice.
Oh.
That sounds awesome. Is that like insurance?
No, that's comp.
You got that through United Health? That's really?
Yeah,
really?
Yeah.
Jeez.
Valued customer.
That sounds excellent. A robot arm. Is it going to do anything good? You going to go to the Super Bowl or?
I haven't thought of that yet.
No? You're going to have to do something good with the arm.
You
know what I've decided through this week? I finally came to the conclusion I'm going to follow my life's dream and become a concert violinist. I've decided that I've spent too many years pining to do this, and it's about time that I really I get in the saddle and get after it. So concert violinist is on the
No time like the present, right?
Goals, right?
Goals.
You gotta have goals.
Gotta smash it out.
That's actually not gonna be happening.
No,
I don't foresee that happening. It was a good week though.
For me it was anyway.
Was it?
I don't know about the market.
It wasn't great for the market. Who are you even?
I don't know. Who are you?
I'm Cody from Wall Street Breakdown.
That's right. I'm Anthony from Wall Street Breakdown.
That's right. You are. So you're not going to ask me how I was doing. You're going to jump right into it. So let's talk about the markets then. I guess nobody actually cares about my...
I do care about you.
My violining. Is that what it's called? When you violin?
I think you're a violinist.
You're a violinist. But what about the action? What is the action called? Violining.
I was going to say violining.
Yes. Something like this.
Yeah.
Something. Let's go. Enough about the violins, sir. Tell me about the markets.
Well, I heard the markets were doing pretty bad this week.
It wasn't a good week. We talked about that last week, that things were probably... You were going to have to come out swinging, and we didn't on Monday. It was ridiculously down. It was the biggest one-day drop for the points in the Dow ever. I mean, it was 4.6%. It's the biggest drop percentage-wise since 2011, but points-wise, it was the biggest individual, because the points obviously are increasing exponentially in the last couple of years as we run the Dow way up. Dow closes the week 24,190, but I mean, we knew this. We talked about this last week. The markets they've had such a run.
Incredible run.
It's been so good, right? You had to understand that, like, once we hit this top and there was a bit of a sell-off, now there's a bit of fear, and I've got some numbers in some of the news that we go through that's going to really explain, the people took money out of the markets. Like, money came out of the markets. This wasn't just like, okay, there was a little bit of hiccup and some computer trading and stuff. There was some computer trading last Friday, like a Friday removed from the week we're talking about, that initialized, I think, a lot of the fear. Starting this week, though, money came out. Like, I think it was like 29.3 or 29.6 billion.
That's hefty.
Yeah, it came out of the marketplace, right? Like, and most of it out of ETFs, but like a bit out of mutual funds and stuff too, like $3-4 billion out of mutual funds. So like, people were really pulling some money out. I mean, this was gonna happen, and now when you see human interaction where they're actually taking their money off the table, I think you're still waiting on a bottom. I would expect more of this next week. I mean, we've had a couple of updates. We closed. It was a decent close on Friday, right? Like, we had a bounce back Monday in the afternoon. If you would have only ever been a trader Monday afternoon, you would have thought you were in a roaring bull market. But Monday got crushed still. Like, it was still, especially during the morning, because like coming off last Friday was just brutal. And all week, good earnings all through the week.
Oh, that's good to hear, right?
But what are you going to do when the markets, and I mean, NASDAQ closed finally the week down. I mean, below 7,000 was such a big deal when they crossed 7,000. There's 68.74. S&P 26.19. The TSX 15,034. I mean, the oil went down. Oil went down below 60. It was just, I mean, gold 13.16. Gold actually went up a little bit. But I can only envision the markets having more issues until we find a sturdy bottom.
So you think that's why oil's going down? It's because of the markets?
To be honest with you, I don't think there's really a correlation between it. I think oil is a standalone commodity that's driven a lot more by the economy, how much money's in the economy. There's money in the economy.
Yeah.
Oil went down maybe because, like we were saying, what we've been saying for weeks, like, there's a range that's going to play in, which I think is probably that $55 to $70 a barrel. It was at 65. It hit a few new record highs or not record highs, but yearly record highs for sure, for years actually highs. And I mean, it's going to take it, right? Like but it's not still running, I don't think. I don't think it's going to $75. I think 70 at best would be probably its top end for right now, because while demand is still out there for it, there's a lot of it out there. And we understand that. There is a lot of it out there. And the countries that are in heavy demand for it, a lot of the countries are in fair oil good shape. Canada, the United States, especially, where WTI is going to be, that's going to be more situated there regardless, and you're going to see the price reflected that way. That Canada and the United States, well, there is a lot of oil, but the price per barrel on the export level, you're going to get a lot more. And you're going to get a lot more as the U.S. becomes more and more oil independent, but I don't think it's correlated with the market. I think that's playing in its own range commodity-wise. I think the market, top end, what do you want to do? What do you want to do? You run for years. What do you want to do? I mean, you're going to find this. I thought this was probably going to end up coming, and it ends up being harsh. It always has to end up being like really harsh, where people get smashed. Retail investors like just got convinced back in probably from 10 years ago when they got smashed, and they get smashed again, and that's just the way it is. And don't go chasing it, because it's not settled yet. You can tell it's very disruptive. Like, don't try to chase positions and be like, oh, I'm just going to get in now. Like, I'm going to get in now while it's down a little bit. Like, look, I would let the market as a whole settle, because this isn't like an issue of like individual companies. And if they are overpriced or not, like we said, even if they have set kind of a new PE average range, and it's a matter of the companies not being over inflated price-wise, it's the market as a whole that's bloody unsettled. Just don't try to play with it until the market kind of decides what it's doing. It had it had too much fun for too long, and now it's hungover and it's angry. And you know what I mean? There was just far too many good times, and the good times come to an end.
That's probably why there was a lot of pullout, right, from the market.
Oh, yeah.
Some billion or whatever you said?
No, 29.3, I think, billion.
Yeah,
but that's a lot in a week.
Oh, for sure.
In a week, it's a record. Right, I mean, in a week, it's a lot of money. So when you see that kind of money come out of the system, you understand that like fear resonates really quickly.
Oh, yeah.
People get shook. People have made money. You could be taking a lot of the house's money off the table still if you've been in for years. Very, very easily, you're taking house money still. This was a correction that put us down for 2018, but didn't even pull back into the earnings from 2017 yet, and a correction that could easily figure itself out in the next week. I mean, stability.
Oh, for sure.
Stability was only a week removed from now. Stability could very easily be a week in front of us, very easily, and this could be a hiccup. But I'm not saying stability's here yet. Right now, it's rocky roads. Like there's no point.
It could be on the horizon, though.
Don't get too pessimistic and assume this is the way things are going to be. Like don't let this be a reflection of the markets. We just had a bunch of good runs for a long time, but. Yeah. You know, like understand that you still got to play by the rules. And when the market says, hey, I'm not really having it right now, your best bet is to go, you know, like I'm going to take my gains off the table and, you know, like sit on a little bit of cash until things sort itself out a little bit.
Right.
Because, I mean, it's owly. It's just very owly, right? It's just that time of the month for the market.
Ouch.
Ouch.
Ouch is right. It seems like we had a lot of U.S. economic news this past week.
And news is really good, right? Like good. As opposed to the markets being down, the news is really good. ISM non-manufacturing index for January beat the estimates by like 3 at 59.9. Business activity was over the estimates. New orders were well over the estimates. Employment was over the estimates. U.S. trade deficit a little bigger than was expected, $53.1 billion for December. They were expecting it to be about $51.9 billion. So exports at $203.4 billion, imports at $256.5 billion. So there you can see where the deficit is there with the imports. Chain store sales up 3% year over year. Last week up 3.2%, but we're still seeing growth in the chain store sales even here into February now. So with numbers continually being up year over year over year, we're showing that even in the down months for retail, things are up. There's money out there. It's not a matter of there not being money. GDP now did change their GDP forecast. We brought this up last week. The GDP forecast for Q1 was like 5.4%, which is just ridiculous. Like, that is a ridiculous forecast to actually see that. And they came back to earth this week, which I still think is a kind of out of the ballpark GDP forecast, but 4%. So they pulled it back significantly, significant pullback, but still 4% GDP growth is really good if that sustains itself for quarter one in the U.S. Job openings in December were 5.8 million versus 5.9 million estimates, so a little bit off as far as job openings go. Mortgage applications, the index is still up. Last week it was down quite a bit, but the index up again. 30-year mortgage rate went up again.
Up again.
So this is like 4 and 5 weeks. It's up to like 4.5%. It was like 4.23 or something like 5 weeks ago. So we're seeing significant 30-year rate increases. And the home builders felt it. Like, I mean, we talked about that last week. Home builders, even though home builder earnings have come
pretty good.
Yeah, they got good backlogs. They've got good margins on the new homes they're selling. Prices are up. They're making more money on the homes. They're selling more homes. Like, things are going really well with the home builders, but that 30-year rate climbing up just happens to be hitting them consistently, right? It seems like every week now it seems to be banging their stock price down. It's not helping that the markets are down overall, right? U.S. jobless claims, the initial claims are down 9,000 to 221,000. Continuing claims down 33,000 at 1.923 million. That's really good. I mean, things are down considerably. The rig count, Baker Hughes rig count, you want to talk about getting back to work? Getting to work, 29. It was up 29. Oil rigs went up 26. Gas rigs went up 3 to 975, up 29.
That's pretty good.
That is a huge jump. Things are at work right now doing big business. So I don't understand why people are looking at the markets going like, oh, things are down, we better pull our money out.
Right.
But when you see them doing it, you have to act in kind. You can't just like assume that, oh, all of a sudden now because they're pulling their money out, I'm going to be smart. No, the masses have shown we're pulling our money out. You know, like these economic indicators can stuff it. We don't care. It's run its course. Fear now resonates because the volatility index was ridiculous, record highs. Like there was no fear at all. So now all of a sudden, like, you know, like one fart in church and it's everybody is panicked. Like you can smell it. Everyone I talked to this week, everybody I talked to about this was the first topic. It wasn't an individual stock. It wasn't anything. It was just what's going, because they're not used to it. You know, like you get it like tamed out of your system when things run really well, or when things are in the doghouse. You just like expect them to be that way.
Very content.
So you're just, when things change up, it spooks you. And you're like, what is going on? Like, I don't understand how like this changed all of a sudden. And the economic indicators don't show any reason for there to be change. But the masses are letting us know that despite good earnings, despite good economic indicators, it's run its course. There's going to be a new low that it's going to find. It's going to have to find a bottom first and settle somewhere before we get back to normalcy of trading. The economic indicators just say like, hey, if things are going good in the economy, things are going really good in the economy. If you're looking for a job, if you're out there grinding it away, you've got a good chance of making it right now. If you're out there looking for new jobs, if you're out there trying to develop a business, there's a lot of opportunities in the United States. Things are going really well, but the markets in and of themselves this week, this given week where I'm not a weekly trader, but if you've got money on the sidelines, keep it on the sidelines. This week, ouch, like just the rope-a-dope to it comes back. It looks like it's coming back, and then it just punches you in the mouth again, and then it's dirty pool. But it's
horrible.
People got greedy.
Oh yeah.
Right? Everybody ran right to the top, and you can never call the top specifically. So you always expect, like after a run like that couple percentage are going to come off as you get your throats cut. And that's obviously what's happened here.
Yeah, that's the way the cookie crumbles, I guess, huh?
Absolutely. Do you want to hear some other economic news that I have?
Yeah, let's check it out.
I have some other economic news. So in Canada, building permits up 4.8% in December versus a 2% estimate. So that's really good. Actually, some of the Canadian news, housing starts, 216,000 in January, down slightly from December, but still up. Canadian jobs, this was a rough one, and this kind of shocked me. Canadian jobs they've been doing so good. We looked at numbers last year and how like they were breaking records. Yep. There were more jobs available, full-time jobs available than like since they started collecting the data, right? They were expected to rise 10,000 in January, 10,000 jobs.
Yeah.
Pretty decent rise. We're sitting at like 5.8% unemployment when we're talking about this. They went down 88,000. So it was a big loss.
That is big.
Big, unexpected loss from a 10,000 gain in the estimate to losing 88,000 jobs in the marketplace. So, I mean, is some of that holiday season losses? But like, wouldn't analysts have all that accounted for?
You would have thought they would have took that into consideration. Right?
Apparently not. So, unemployment at 5.9% now. That was interesting. I didn't think that was something that...
I didn't see that coming.
No, I didn't see Canada dropping those kind of jobs when the numbers have just been so good. It's been so good job report over job report. It's not like we had one or two. Like the thing we listened to was the consistency, right? There was so much consistency. And talking about the housing market and like housing starts and all this stuff. When the Bank of Canada meets again, the Bank of Canada, well, obviously we're expecting 3 interest rate hikes this year. The Bank of Canada is really going to have to look into what's going on in Toronto and Vancouver. Like the CMHC put out a report this week where they're not even sure exactly why Toronto and Vancouver have such egregiously high real estate prices. And the fact that Toronto and Vancouver not only have really high real estate prices that completely are out of the norms for like there's no obviously comparable cities in Canada, but when you compare just stature of cities, those cities are growing at rates that are, like you'd think they were big international hubs, which they
kind of
are, but not on like a business level the way Singapore or a Hong Kong or New York are, right? Like they're just not, they're not that affluent. They are in Canada and for first world, they are nice cities, but man, they're growing at a rate, like I said, CMHC doesn't understand, but the new housing supply is down. Like the actual supply that's being created, it's like there's like, it's like they're trying to almost create. Like it's like, does the permit offices in those places just like slow down permits and not allow them through? Like they're trying to like create like a marketplace of demand. Like,
maybe.
Like it's strange.
It is kind of.
The CMHC even said they can't really understand why it's happening because they look at other comparable cities in Canada. And I say comparable, obviously, in a rough sense, but in Canada, Calgary, Edmonton, and Montreal. Montreal is the biggest rental market in all of Canada. A lot of housing available. So while Montreal is very big, there's a lot of housing. So the prices don't go crazy. The prices stay fairly stable. Edmonton and Calgary, a lot of urban sprawl. So we're spreading out horizontally, not vertically. We're covering a lot of space. We have a lot of space here in Alberta. Like there's not near the suburbs that there are if you talk about places like Toronto or Vancouver, where the suburbs make the cities seem like they go on for forever. Multiple cities, right? You could go through multiple cities and not realize you've actually left Vancouver or Toronto. But the CMHC doesn't understand what the deal is. Like why, if you've got to sneeze, just sneeze.
I was about to, that just went away.
If you've got to sneeze, ladies and gentlemen, my colleague Anthony apparently has
having a fit over here.
Yeah, he's trying to get it together. Have a drink of water while I talk about the housing market in Canada.
Sure, I will.
So yeah, it's just a matter of I don't know what the deal is. Like you'd think there would be people chomping at the bit to get this stuff done, right?
You think so?
Like these markets are boiling over. The prices are going up nonstop. We've heard Stephen Pelaws from the Bank of Canada say like they're not going to be comfortable raising rates if they can't get a finger on the pulse of why. Toronto especially is just going off the charts for real estate prices. It's not justifiable. Why are the permits? Why is the work not being done? You can't tell me that people aren't looking to get this stuff built.
If they don't understand why, I can't understand why. I don't know.
Something worth looking into.
Conspiracy.
Yeah, there you go. Bitcoin. You want to talk about Bitcoin? Let's talk Bitcoin. Everything kind of up and down. It was a nothing week for cryptocurrencies. There was a bit of news. JP Morgan, Citi, Bank of America, and now Lloyd's have all banned cryptos trading on credit cards. Far too volatile, so don't go to Coinbase or anywhere else and expect that you're going to be able to put any kind of credit card that's a JP Morgan card, a Citigroup card, a Bank of America card, or a Lloyd's card on there and use that. They don't want anything to do with it. Bitcoin, $8,363.48 about 2 hours ago when I looked at it. it is yeah. You all these cryptocurrencies, all the altcoins, they all seem to run in accordance with Bitcoin.
Well, yeah, it's the grandfather, right?
So like, there's just yeah, you see everything move around, and I don't understand how it's not all at zero.
No, yeah.
Like, it's been banned enough places. There's just, I guess, Blue Moon, right? I hear North Korea and South Korea are starting to re-warm up talks with each other.
I think this is Erie, Indiana.
Yeah.
I woke up in the Twilight Zone.
Bizarro world.
Bizarro world.
Bitcoin eventually will be an actual currency or something.
I hope not.
Yeah, there you go.
That was the markets, I guess, wasn't it?
That was the market. Oh. That's basically the market. I guess you call Bitcoin a part of the market.
Yeah, I guess. So I guess let's move on to some headlines.
It's kind of sad that we cover Bitcoin and we don't actually cover like Forex. Like, we don't sit here and talk about the dollar and the pair of the dollar with like other G10 currencies. We talk.
Yeah, we haven't done that yet.
No, we talk Bitcoin though every week. Every week I have to give people Bitcoin and like
a little bit of
Litecoin and Ripple and Ethereum news. Like
Ripple.
Yeah, like this stuff matters. I look it up. Yeah. I have to look it up every day. Do you know that? Every day I have to look that up.
You get sad when you do that?
I'm very sad about it. It's hurting my feeling. It's not anything that anyone should actually have to do.
No.
Yeah, it's there for a purpose. I
see the sadness in your eyes.
Yeah, it's taxing. It's so taxing. It'd be nice when it's gone. It'd be nice when we can get back to really talking about the stock market.
Yeah, I think it's just like a fad.
It's been lasting a long time. I'm glad it's finally coming back to some sort of reality.
Well, Bitcoin's been around for quite some time.
Yeah, 2009. Yeah, it's been around for a long time, but it's Go, let's see. Carry on, please.
What is this? White House has an infrastructure funding plan. What is that about?
Yeah, so this is going to come out Monday of this week. So it's going to be $200 billion.
Wow.
Over 10 years is going to be the infrastructure spending plan. We've talked multiple times on this podcast about how the U.S. just has an infrastructure rating, like across the United States, in the D, if you're talking A to F, right? Like the infrastructure, bridges, dams, roads, things need to be rebuilt, and they need to be rebuilt and up to code ASAP.
Yes.
And this creates a ton of jobs, labor jobs, like high-paying, skilled labor jobs. This creates all sorts of manufacturing. There's a lot of employment and money that comes out of this. So for the U.S. government to be finding this $200 billion, which they're finding in their budget and basically, canceling out other dead weight to get this going, I think is an excellent move for the economy. It's going to be over 10 years, and they're doing this in accordance and in unison with municipalities and the states. They're not doing this solo on their own. They're going to go in and they're going to give $100 billion in state and municipal matching funds. Is what this is going to be out of that $200 billion. So $100 billion is going to be funds that they're going to use to match. So it's going to be capped at 20% of the funding.
Right.
So you put in 80, we'll put in 20, up to 100.
Yes.
Right?
Okay.
So like they're putting in a lot of money, but they're getting the municipalities and the states to put in money as well to build their own infrastructure, and rightfully so. But this is the way that we need to get this done. I think this is a big move. I think this is what caused the last real... When you talk about the middle class in the United States, when people reminisce about the middle class, when the middle class was what it really was, which meant like there could be a one income in a family with 2 kids and a wife that stay at home, and it was like a sustainable life. You could have a house, like a mortgage and all this kind of stuff in most cities in the United States, right? Save for New York or potentially, save for a couple specific situations.
Right.
This is where the middle class came from, was when the United States was building its infrastructure across the country, right? In the 1940s and 1950s, like when the Hoover Dam in the 1930s. I mean, that kind of stuff is what built the United States. That's what built the middle class. That's what separated a lot of people into this class where things were tangible because they were skilled laborers that were put to work. There's not enough skilled laborers out there anymore. There's a lot of low-end labor, service workers, or there's people who are high-end labor, but there isn't enough jobs for that middle end $100,000, $88,000 a year skilled welder, whatever it ends up being, because they're just, those jobs just aren't really there. It's not that the skill isn't there. It's that those jobs have become, you know, $38,000 a year fry flipper jobs. And no hate on people flipping fries. No. You've got to do that. But the way that you get these jobs back is by building new bridges. Because you tell me, Golden Gate Bridge, Hoover Dam, what they've built in Niagara Falls, you go through all the things that are major infrastructure plans that the United States has. How old are they? 80 years old, 100 years old. Where is the new Taipei 101, your Burj Khalifa? Where is the something that stands out as this magnificent thing that represents what the United States can do in the 21st century? Right? Like they haven't, there's none of that. Statue of Liberty stuff is old. I mean, not that they built the Statue of Liberty, but stuff is old, right? Like, it's died off. The funding in infrastructure, that's how you get to a federal rating of D. Because you're not putting money into it, because it costs a lot of money to maintain. But the fact of the matter is the business cycle or the job cycle or whatever cycle you want to look at is a system that you have to feed into to get something out of on the other end, which in turn would be things like taxes and stuff. That's correct. And building up the fact that when a city or an area gets a development of that size that can employ thousands of people at, you know, $35 an hour over the course of a 5-year period or an 8-year period or whatever it takes to build something of that significance or refurbish things of that significance, you all of a sudden get inflation in that little area that's good, right? Because other things thrive as people start to pull ahead of what the norm was in that area as far as wages go. So businesses thrive in that area, and all of a sudden you get all this feedback loop where things go back into the system. So it's I think vital that the United States go ahead and do this. And I know that the Democrats actually have a plan of, I think it was $1 trillion as opposed to 200 that they were tabling. So either side of the coin understands that infrastructure was what built the economy originally. Not anything else. It was building it by giving jobs and having jobs available that were skilled, high-paying jobs. It's a smart plan. Find the money elsewhere because there's a lot of money wasted. Bureaucratic nonsense. Wasted. Stop wasting your bloody time and start doing something viable. And that's, hey man, you got a D-rated infrastructure plan. Let's get it fixed.
Yeah, no doubt.
Was that a good rant about infrastructure?
That was a good rant.
Woo! How do you like that? I'm trying to cover for your sneezing.
We got a little bit of more drama to talk about. Let's talk about the soap opera between Qualcomm and Broadcom.
Yeah, it's never a week without news. Qualcomm, Broadcom.
Never.
So Broadcom gave Qualcomm their best and final offer at $82 a share. So the previous offer was $70 a share, so they upped it, and we heard they were going to up it, and we heard that Qualcomm shareholders really thought they were kind of being undervalued a little bit.
They're like,
I mean, Qualcomm, again, has had some licensing issues, some legal issues. Qualcomm has not been doing anything fantastic. So this is the best and final offer from Broadcom. The best, the final.
Let's hear it.
This is it, $82 a share, $60 in cash, $22 in Broadcom share equivalents. You want to know the terms?
Yes, I do.
Terms. Qualcomm can't delay or adjourn the March 6th annual meeting. So that's the meeting that people are going to vote on things. So that's part of the terms. They want this to go through. They want the board. They want people to be able to vote, shareholders to vote. They want this to go through. So Qualcomm can't delay this. If Qualcomm wants this offer's on the table now, needs to be done, and they must acquire NXP Semiconductors at the $110 share price that they've offered, or they got to terminate the deal. It's either get it done or get it over with. Let's get it, one of the two. You got NXP on the hook over here, Qualcomm.
Ultimatum.
It's time to get it done because Broadcom now upped this offer.
Yep.
$12. That's a big one. Shareholders see that. Shareholders know that Broadcom is doing a lot better in the overall space than Qualcomm. Broadcom of the semiconductors growing the most last year out of any of the semiconductor companies, any of the big ones, obviously. Some semiconductor companies up exponentially, whatever, that doesn't matter. But out of the big boys, right, the ones on the Philadelphia index, the big heavyweights, Broadcom up 10, 12% over and above the guys that finished in second and third. So Qualcomm shareholders, they want this. So Broadcom thought, you know what? If we're going to raise this this offer, you're going to get $60 cash, $22 in Broadcom stock.
Yeah.
We're going to make some demands. We're going to say, hey, NXP deal, get that done. You want NXP in-house? Let's get it done. We'll get it over at Broadcom with the Qualcomm stuff. We'll get it all done. Let's get it done. Let's get this to regulators.
Yeah.
Let's get this passed. Let's get this done. And you can't adjourn this meeting. Let these shareholders vote on this.
Yes.
Let these people vote on this. Qualcomm came back later in the week because the soap opera doesn't end. The soap opera doesn't end. Qualcomm said that at least 2 multi-billion-dollar contracts that they have right now.
Yes.
From unnamed companies. They won't name who these companies are.
The plot thickens.
But multiple. The plot has thickened immensely, sir. 2 unnamed companies. Multiple companies. So could be more than 2. Yeah, no, hold on. Come with me. Come down the rabbit hole. Would dissolve their contract with Qualcomm if Broadcom took over, saying that Broadcom, they don't feel that Broadcom has the future, the foresight in the semiconductor industry that some of their competitors do, basically insinuating that Qualcomm is a better company than Broadcom, but Qualcomm wouldn't release names. So do you think this is just chicken? Is that what this is? Are they just basically saying shareholders, we've heard that, we might lose some. So you go to Broadcom and Broadcom's share price might go down as some of the stuff that comes over with us. Yeah. Some of the contracts might go away.
The dance begins.
Because they don't want... this dance has been going on. The dance begins. This dance continues. This dance has been going on for a while. So I thought... the Broadcom deal is the deal.
I'm intrigued.
I can't imagine any company would have came out and said they don't see Broadcom as being a company in the semiconductor industry looking into the future properly. And then basically weighing that with the fact that they would tell Qualcomm...
We know just blowing some smoke.
Qualcomm's had a lot more problems than Broadcom.
Yeah.
Qualcomm was supposed to be so far out in front at this point a couple of years ago with the Snapdragon and all that, and it never panned out. They were the only semiconductor out of the big boys that were flat last year. They were flat, never grew at all.
Just flat.
They were flat. There was no growth.
I hate feeling flat.
Yeah. No pump at all at Qualcomm.
No.
I would imagine the shareholders end up taking this $82 share deal.
I think so.
I want to be with Broadcom.
I don't have a crystal ball at all, but it might happen. It could happen.
It looks like a good deal to me.
It does.
It looks better than staying with Qualcomm, who's had nothing but issues.
Yeah, no doubt.
Yeah.
Let's move along. What's this Bayer and Monsanto merger?
Oh, Bayer, you
Bayer,
mean?
Sorry.
Breyers.
Oh, sorry.
I was like, you talking about the ice cream company?
I have ice cream on the brain.
Bayer,
sorry, folks.
Ice cream company is merging with a seed company. They're going to start putting...
Bayers.
They're going to put seeds inside the ice cream with Breyers. It's going to be delicious.
Delicious.
Yeah. So Bayer, not Breyer,
no.
Big multinational company Bayer.
Sorry, Bayer.
Sorry, Bayer. So the Brazil antitrust agency CADE approved Bayer's takeover of Monsanto, $66 billion deal. It was $128 a share when the deal was put on the table. This was, I think, March of 2016. This was a while ago. This deal got tabled. We're still waiting for antitrust stuff to get done, but it must be getting done because there was more than just this news. So not only did Brazil finally, and Brazil's one of the last companies, we know this with the AT&T Time Warner deal, Brazil hangs on to the bitter end with their antitrust business. So CADE approved it. So we're waiting on the US and the EU. So we're waiting on the big ones. We're waiting on the ones you're always waiting on, the United States and the European Union to finally say that things can go through. But earlier in the week is when this happened, when Brazil finally gave Bayer the go-ahead that they could buy Monsanto, $66 billion. Stay with me. You're with me, right?
I'm with you.
Okay, you're not going to sneeze or nothing. Bayer, not Breyers.
No.
Ice cream's delicious, and I'm really hungry, but that's not flying right now. So Bayer now said, later in the week, with me, right?
With you.
They plan to sell their global vegetable seed division and allow BASF exclusive access to their digital farming data to appease the EU antitrust concerns after the Bayer takeover of Monsanto. So BASF is going to get exclusive access to its digital farming data, which is probably a fairly robust database, I can imagine.
Sure.
So they're spreading things out a little bit there, giving another one of their competitors access to some extra information, some proprietary information to make sure there's not a lot of antitrust going on. And then on top of that, selling the global vegetable seed division that has over 1,200 unique seeds.
Whoa.
It's a big division because they're going to be bringing on Monsanto, which has umpteen seeds of their own, right? So they're trying to make some sort of appeasement here with EU. So the rival Syngenta is the one that's very interested in the seed business. There's no price that's been put on what the seed business is going to be worth, but Bayer, you almost had me say Breyer, damn it. Bayer, Bayer is trying to really make sure they can smooth this out and get this deal done to finally acquire Monsanto and close this deal out. Appeasing EU, I'm sure will end up appeasing the United States as well, as Bayer's much more situated over in Europe than they are in the United States. Obviously, Monsanto quite a bit situated in the United States. There's going to be a lot of appeasing needed to be done. Everybody's going to need to be right fluffed to get this finished the right way.
Yeah, no. Sorry, Bayer.
Sorry, Bayer.
I heard Amazon is getting into their own shipping.
Yeah, so this is a pretty big story. The shipping companies took a bit of a beating this week. So, okay, this isn't out there. Amazon didn't go out and release any kind of like press release about this. This is just rumor. So let's take this for what it is right now. We've been talking pharmacy. Like, we've been talking a lot about Amazon getting into the pharmacy business and what that's going to end up meaning, and how we thought like that was like a natural conversion into what they were going to do, right? Like the logistics were there. They bought a bunch of licenses. And the Whole Foods point of sale now, the Amazon Plus point of sale. Is it Amazon Plus where you go and do your own buying on the computer, pay? It's something like that. They've got a bunch of, Amazon has so much stuff.
Oh, yeah.
No, Prime is on the website. There's an Amazon, there's like a Plus, like a retail location that Amazon has in a couple places. They've got all this stuff. I mean, Amazon is just, we thought pharmaceuticals was the move, right?
We did.
Like we saw, they've got some licenses, all this. And it might still be the move. Who knows how many different ways Amazon's going to go. Like there's a company in the earnings I'm going to talk about that's in a lot of stuff, doing stuff really good. And Amazon is a lot like that, where they're just in a million different things, doing a million things right. So we've heard the rumor is that Amazon went out to shipping platforms and asked them to add Amazon as a delivery option on the waybills. So right beside the USPS, the United States Postal Service, FedEx, and UPS.
It's going to be Amazon.
So
could be.
Does that mean planes? What does that mean for all these other, how much purchasing of new equipment does that mean? Because like, there's a lot of, like you're going to have much more fast-tracked, if people are choosing to ship with Amazon, like Amazon's a shipper.
Yeah, that's right.
With parcels that have nothing to do with Amazon, which is what I assume this means, right? Like that's because why else would you put that on there? If you're shipping with Amazon by buying off Amazon, then Amazon's just going to ship it through Amazon in the Amazon box.
Right,
and it's all. But if you're doing it on the waybill, it's like you're choosing to have Amazon as your shipper, are you not?
That's what it sounds like.
That's what it seems like to me, too, from what I've seen, right?
Right.
So a lot of shippers were down this week. So Amazon apparently getting into the parcel delivery business.
That should be interesting.
So
it almost seems like the next logical step. They do everything else.
They do every other thing from point of sale all the way down.
Right? And then why
they
not
just don't deliver it themselves
and just deliver themselves, right? It kind of does make sense that they might do that or they would do that.
What does that mean for all sorts of other companies? Like, how many planes do you need? Like, how many planes does UPS buy from Boeing every year,
or
right?
FedEx
like, exactly, right? Or DHL or any of those large
Yeah.
companies. Like, so what does that mean for all the companies that Amazon's going to have to start pouring money into? I mean, this American economy is growing at such a rate. When you see companies,
maybe they're doing like subcontracting,
and Amazon's doing such a good job of sidestepping monopolies, eh?
Right.
Like they're just getting into every industry that brushes up against an industry they already kind of run.
Yeah, they're
like, we kind of run this sphere. Let's go over here to something that just kind of touches into that. They'll never be able to call us a monopoly because we're not. But we're taking enough market share in every different sphere to justify that share price, which is blown to the moon. Like that share price is so expensive. They're valued at like a number that is just off the charts. But when you consider the way that they grow in all the different areas that they grow in, it's tough to not see them actually grow into that share price.
Oh, that's very true.
Like they just grow. Like you want to talk about urban sprawl or horizontal spread like in Edmonton and Calgary. They do that throughout the business sector.
Oh, yeah.
They spread through everything. Like they just are like I don't want to say they're like a disease that spreads, but they...
Let's say disease, a parasite.
They just...
I know, is that worse?
They just move into whatever, right?
Sorry, Amazon.
I love Amazon.
Oh, me too.
Right? That's totally not meant to be. I'm more...
If you're looking at it as a whole.
As a spectator, I'm more astonished at the way they're able to find their way into all these different industries and just like envelop market share.
Because they're a boss.
They're a boss. Oh, Bezos is a gangster.
Oh, yeah, straight up.
Straight gang. You ever seen that guy? He's so yoked. He's such a gangster.
You gotta be. You run Amazon.
Amazon, yeah. So they could be getting it. And shipping business and a lot of the parcel companies this week were hit even harder than the market was hit, even though parcel companies have had really good earnings recently.
We have some news from Lululemon. I guess the CEO.
Yeah, CEO. He was getting it in.
He's getting it in. Huh?
CEO Laurent Potvin resigns after falling short of company standards of conduct.
What does that mean?
The CEO replacement is ongoing at Lulu, which is doing really well. So I wonder how this affects their apparel business, which is not floundering at all. It's doing really, really well compared to like Nike and stuff. We were seeing ridiculous same-store sales growth and stuff out of Lulu, right? So maybe this guy, who knows? It was like some girl that was there for a while, and now she's gone. Now they didn't re-sign her in 2018. She was there for a while. She left. She came back. I don't know. He was doing whatever he was doing. You know?
Right.
He's a CEO. I don't understand. We talked about this.
We did talk about
like
this
your
in
company.
the podcast,
Your company's doing like I guess. Because we live in you live in a new world. You live in a place where you're not allowed.
This ain't the 1950s.
This guy isn't allowed to be like a big time swinging.
Yeah, he can't be a boss.
You can't enjoy the fruits of your labor.
No, why not?
Even if you're dominating.
Yeah,
in your
I'm
sector.
a CEO. I should be able to. Have some fun.
And it's not like she
wasn't hurting anybody.
She was a willing part. They were having mutually agreed upon good times.
Probably contracts.
Yeah, I would
sign it away.
I would imagine at that scale.
You
probably
50
would.
Shades of Grey or whatever.
I've never seen that.
Neither have I, but I heard a contract.
There's a contract in there? Safe word is tangerine.
There you go. What else has happened in the world of headlines?
In the world of headlines. Yeah, we're going to transition on that before we say anything too litigious. AbbVie, so we know Abbott does the medical stuff, and AbbVie does the more discovery, the research and development.
Right.
They're more the pharmaceutical side of it now. So the FDA has designated Imbruvica, which is an AbbVie drug that we've been hearing about forever. It's a gastric drug for cancer. Orphan drug status, which is big time. It just means you went out. It's a drug that's being used for people that are, it's rare, much more rare to get this disease. So you're going to be able to use this drug on a much smaller scale. So the research and development cost quite a bit of money to go through all the stages of FDA approval. So when you get designated with orphan drug status, you get some of the money back that went into the research and development costs because you've created a drug for a market that's obviously very small, that doesn't have near the turnover that a drug for a much bigger market, like having erectile dysfunction. Everybody wants to have a heart on, but not everybody has gastric cancer. You know what I mean? So you've got a bigger market in the one thing than the other thing. So you create a better mousetrap where people need mousetraps, as opposed to creating a better mousetrap where not a lot of people need them, but some people need them really bad.
Yeah.
You get this orphan drug status, and they were designated that, which is big news, which gives them 7 years of market exclusivity with this drug. Nobody else can do anything close to this, so this is going to give them a chance to make some of that money back. So this is how they get it back, is the market exclusivity, because nobody else has anything close to this. Doesn't allow anybody to bring anything close to this to market.
So there's like rules and regulations into this.
Yeah. They had to apply to get this orphan drug status. Yeah, this is like after the drug was already developed. You have to put all this money into this, get this developed, get it passed, and then hope you can go back and retroactively get the FDA to give you this, which basically gives you some exclusivity to be able to sell this drug and make some of that money back, because you've made something that's probably deadly. I would imagine if we looked into what Imbruvica cures, I'm sure and a lot of the times it can be deadly, but it's on such a small scale that people don't have access to things that can help them.
Right.
And AbbVie doing A, good work for people who need it, and B, getting a little bit of kickback for what ends up being expensive R&D. And AbbVie, such a strong company for making new drugs. Like there's a reason Abbott spin them off. Like AbbVie is it's a powerhouse for as far as pharmaceutical R&D goes. So just proving once again that more of their stuff comes out just like you'd expect from just
definitely.
a power. They're one of the if not the best for drug discovery.
Oh, probably, yeah.
Tablet sales in the world. The worldwide market went up 10.3% in quarter 4 for detachable units. So that's the ones you take off of the keyboards, not the keyboards that we have on ours that we bought, but the ones that actually come with a keyboard that's proprietary to that one, like a Surface Pro.
Right, okay.
Yeah, so 6.5 million units in total, so that's up 10.3%. Slate tablets, like the ones that we have, that's just the slate, like Moses came down from the hills or from the mountaintop. 43.1 million in quarter 4, so that's way out in front of the detachable market. But the detachable market's growing considerably. Apple, they lead the market share, 13.2 million, up 0.6% year over year, 26.6% market share. So they are way out in front market share wise. Amazon, though, 7.7 million. They were up 50.3% in sales this year. So that's way, way up. Apple only up 0.6%.
Yeah.
0.6
Amazon
to
crushing it.
50%. Like we said, Amazon in everything. I didn't even know Amazon had a tablet. Like I knew they did, but I didn't know their tablet was just straight crushing it.
No, I thought they had didn't they have the Kindle or something like that?
The Kindle, but this is
I don't know if they had any other
this
tablet.
this is but it's up to market share of 15.6%. So it's moving up. And we know their cloud service is already way up in front of everybody else. The Amazon, the Echo is up way ahead of everybody else. Amazon is, in every market they get into, they seem to scratch and claw and get market share, if not the lead. How you don't bet on Amazon for stuff is beyond me. Samsung, number 3, 7 million sold, down 13%. So down. Samsung. After good earnings last week, Samsung down. This is the first time I've seen Samsung down in anything in a while. But Samsung tablets, which we have, which are good tablets.
Good tablets.
It burned into my screen. I watch YouTube too much, and YouTube burned into my screen. So so the OLED or the Super AMOLED screen, it's not, it burned into my screen, Samsung. But down 13% in sales year over year. They got a 14.1% market share. So that down 13% with Amazon up 50 is what allowed Amazon to jump Samsung in market share.
Oh,
so
definitely.
Amazon jumped into second place there, and while they're considerably behind Apple, they are making headway, significant headway, up 50% in sales. Sanofi selling their generic drug unit, which is estimated $2.4 billion. Torrent Pharmaceuticals out of India or EMS out of Brazil are the two companies that are in negotiations to buy it. Sanofi just finished a $20 billion asset swap with Boehringer Ingelheim, and they acquired Ablinks and Biovertiv, which are drugs, for $16 billion. Wow. So Sanofi bringing in drugs that are really exclusive, ready to make drugs that are put out there in the market that's just under theirs, and selling their generic drug unit. So those are two big moves at the same time. $16 billion they paid for those two drugs. That's they're expected to turn over some money.
And what a mouthful too for the names.
Yeah, well, they always use these crazy, like Ablinks, not too bad, but Biovertiv.
yeah.
Like, it's not going to be called that.
No.
It's going to be called Dave's Cough Syrup or whatever. It's going to get a much easier name, right? Like, but right now, when I'm giving it to you raw, like, this is from the scientist's mouth, from the clipboard to me,
from
to
the
you.
Source?
Yeah, this is from the source, right? We tapped this. Like, have you even heard of Torrent Pharmaceuticals out of India or EMS out of Brazil? I'm digging these headlines from deep down. But Sanofi, man, like, I mean, that's a huge drug company around the world. Well, they're not huge in North America, right? Like, they're over in Europe. They're huge. They're huge. $2.4 billion for their generic drug unit. Generic drugs are the stuff everybody has access to. That's the cheap stuff. Yeah. They're opening up a little bit of money because they just finished a asset swap with Boehringer for $20 billion and bringing in the two drugs for $16 billion. That's a lot of money. $36 billion.
That's some pocket change.
Yeah, Sanofi doesn't get any kind of press coverage over in the West, so whatever. I'm covering it. So too bad they're tough to understand. When it's called Dave's Cough Medicine in a couple of years, we'll come back and I'll mention it again. And it's still going overseas. Speaking of which, So this is the last of the headlines.
Okay.
SoftBank plans to list their mobile carrier unit, which is the third largest in Japan. So it's a big telecom company. After years of notable acquisitions, they need to raise some money. So they've spent a lot of money over at SoftBank on Sprint and a bunch of other stuff. So their mobile carrier unit over in Japan is huge. They're going to list that on the stock exchange. Should raise about $20 billion for a minority portion sale, which it sounds like they're probably going to do. SoftBank's acquisitions of Sprint and a chip designer company ARM Holdings has put them under some debt pressure. Moody's and S&P both have them ranked at debt as junk. So their debt is not really that good. Well, no, it's not good at all, right? So, but SoftBank has a lot of assets. They need to raise some capital, so it's looking like it's probably going to be a minority sale of the mobile carrier unit over in Japan, but it's a big one already. So when it goes out there, you know it's going to bring back some money, and it's going to ease up some of this debt pressure for SoftBank, who's now capped out on buying Sprint. We looked at that last week.
That's right.
They're right at the 85% mark, and they've made a deal with themselves contractually that says if they cross 85, they got to buy it all. So they're sitting at 85. They're probably going to sit tight for right now, but they've spent a lot of money, spent themselves into a corner.
Yeah.
And now
time to hunker down.
Now they've got a list of mobile carrier units. So that is that's the headlines.
That's the week of headlines. Let's move on to some earnings.
There wasn't as many headlines as you'd think there would be in a market.
Because
so erratic,
so broad.
Like
there's so many companies there.
There's so much going on, and the market's so erratic that you'd think you would get a lot more. There would be reasons why the sell-off was happening. Yeah. You'd think, like somebody would have, hit somebody else with a shovel during a meeting, and it would have been like, well, I can understand that, right? Like, there was a,
but this is
a boiler room brawl on the J.P. Morgan Chase boardroom floor, like that makes sense. That makes sense, but that didn't happen.
This is reality.
This is just reality where things reach tops, and on no news they trade off, and that's what the panic is the fear is the unknown. Who knows when that could stop, because even good news can sometimes be accompanied with bad reactions. And that's what we're seeing right now, because the news is fine. The economic news was fine. The headlines were good. They were, I thought they were fairly stellar. It was actually good news. Companies making progress in their industry. It wasn't, other than the Lululemon guy, who, I don't know how that's going to affect yoga pants sales.
Poor guy. My heart goes out to you.
Yeah. Yeah, Laurent Plot de Ven. Yeah, you should have. Yeah, keep it in your pants, bro. Yeah, keep it in your pants at work. You probably wrote those standards and practices.
Right? He probably signed away on it. These are the new
he was like, I'm gonna follow these for sure.
Yeah.
Oh, I'm following these right.
About this.
I'm following these right now. Like that's no problem. Don't you worry about me.
All right, so we got some earnings from Disney, Hasbro, Tesla, Twitter, and Nvidia, but many, many more.
Many more. It is slowing down. It's starting to slow down. We're starting to get to the end of the earnings season. But we do have quite a bit of earnings. Bristol Myers Squibb, another one of the really good drug companies out there. Earnings per share is 68 cents, beat the street by 1 cent. Revenue of $5.45 billion, beat the street by $100 million. That revenue number up 4% year over year. Bristol Myers Squibb closed the week at 62.70. I'm not sure how much any of these numbers that I give you of what they closed at is really going to be relevant, because the market was so down this week that, it's not really... It's tough to tell, I'm going to tell you, Bristol Myers reported good earnings. Yeah. Earnings that beat the street on revs and EPS and had good, all their market breakdown, like Opdivo, big drugs. Opdivo is used with in a combination with a bunch of drugs and used on its own for a bunch of different things. Opdivo's a great drug, up 4% revenue. Eliquis up 44%. Orencia up 6%. Sprycel up 7%. The Checkmate 227 combination of Opdivo and Urovi is still going along really well with a completion date of 2020 expected. There's no problems. Things are going really well over at Bristol Myers, but then I tell you, 62.70, and you go look at it in relation to the market being down, and it looks like Bristol Myers reports earnings, and then somebody sucker punches them in the gut and takes 3% off their earnings, or 3% off their share price. So it's not I give you the share price, but let's keep it relevant to the fact that the market was on its own this week, and good earnings couldn't really buoy a lot of companies. Hasbro, one of the few companies that actually reported what I thought weren't even that great earnings. People really liked the conference call, like the call afterwards. I didn't really think it was that great, but Hasbro actually got a pretty nice bump. I guess people are just hoping that Hasbro saves the toy industry.
I guess so.
Yeah, Bristol Myers doing great. That checkmate 227. If that ends up, Yervoy and Opdivo both big drugs. And the combination of the two, Opdivo's worked in combination with a bunch of stuff already. There are a lot of phase 3 trials just finishing up, and that's already being used solo. It works for a lot of good cancer treatments. So I mean, it's impressive to see a lot of these companies working together too to make these happen, because that's a 2-company deal there. Cummins EPS of $3.03 beat the street by 36 cents. That's a big beat for Cummins. Revenue of $5.48 billion, beat the street by $240 million. Cummins revenue up 21.8%.
Not bad.
Year over year. Cummins doing a really good job. $164.05 to close. Again, take that for what it's worth. Engine division up 16%. Distribution up 16%. Components up 32%. Power systems. Whoa. I assume that's where you plug in the axe and you just grind some Van Halen, something like that. Yeah. But that's up 18%. Everything up double digits.
Good.
Cummins revenue up 20. Yeah, bad, right? Market down.
So bad.
Economic indicators up. Earnings great.
Great, yeah.
Things down, right? So you got to just bear with it.
Take it for what it is, yeah.
Take it for what it is, right? Just bear with it. Don't try to chase it. Let it settle, but just bear with it. General Motors EPS, $1.65, beat the street by 27 cents. That's a really nice beat for General Motors. Revenue of $37.7 billion, beat the street by $1.15 million. That number for revenue down 5.5%. General Motors moving out of a couple of different divisions. I'm not expecting the revenue number to be as robust as it probably could be over at GM. GM's doing actually a lot of really good things right now. 41.46 is the share price. Record EBIT adjusted $3.1 billion in Q4 as far as earnings go. So that's EBIT adjusted. So we're already getting to a real big breakdown. But that's a record of $3.1 billion, $2.9 billion from North America alone. So a lot of business, a lot of that EBIT adjusted number, that big earnings number coming out of North America. So they do still globally need to pick that number up significantly. They're either breaking even or there's money being lost to only be making in profits of $0.2 billion, $200 million globally.
Yeah, pick up the slack.
You got to pick it up, right? Improvements in all segments, though, and strategic cost reduction plan is firmly in place. General Motors doing a fairly streamlined job. Need to pick it up globally, but still doing really good work in North America. Gilead Sciences EPS of $1.78, beat the street by 11 cents, just beat after beat. Revenue of $5.9 billion, beat the street by $160 million. That revenue number, though, down pretty significantly, 19.4% year over year. Gilead closing the week at 79.32. Genvoya up 88% in sales. Truvada down 8.2% in sales. Harvoni, the big one, down 60.7%. That's a big one for them. Epculsa down 46.1%. $5.5 billion charge for tax cuts and a job acts that they decided to take in this quarter. But their big deal is all those drugs being down. Like Truvada, Harvoni is a big drug for Gilead. That's for that to be down 60% in one quarter is significant drop-offs. They're expecting that to be doing big money for them. And when you see drugs that are supposed to be making back billions of dollars not doing it, and you see revenues down almost 20%, and other drug manufacturers that are doing a really good job in the R&D department, bringing drugs to market, being able to bring drug combinations to market, they've got a long way to go to turn this around. That is a recurring theme. These average earnings calls over at Gilead to the point where they're really starting to be outpaced by a lot of other comparable companies. Noticeably, just taking the bullet points of the earnings calls, you can see them being outpaced.
Ouch.
Walt Disney EPS of $1.89, beat the street by 28 cents. Revenues of $15.35 billion. That missed by $100 million. So Bit of a miss for the Mickey Mouse over there, but up 3.9% revenue year over year. Walt Disney $103.09. They've come out and told us ESPN's streaming service will be $4.99 a month. Television subs are down 3% year over year, but Parks and Resorts up 13% in revenue with operating income up 21%. That was a really big winner over at Disney. For revenue, media was flat, studio entertainment down 1%, and consumer products down 2%. Everything down. Television subs down, media down, studio entertainment down, consumer products down. Revenue missed. Yeah. But Parks and Resorts up big time, and they've got a lot of new parks and stuff being opened up, like spin-off parks that aren't like Disney, but like a theme, Cars and stuff like that. They've got all these parks opening up.
Star Wars world,
they've got a lot of good stuff going on, and when you see that the parks and the operating income up so much, 21%. They've got to hedge their bets as best they can. Like, I don't know how quick this transition into streaming, especially if they move away from the theaters, is going to be that profitable. Right. It's going to take a bit of time, like it took the WWE adjustment, and that's got a very, very specific niche fan base, like fan base that's loyal. I don't know if Disney has a loyal fan base the same way, because there's a lot of companies that make comparable type of like media. Right. You wouldn't because it's not Disney just pumping out the same Mickey Mouse and you're addicted to Mickey Mouse. They've got a million brands going, so you really got to be able to. You're gonna have to be able to bring people in, because when you see all these numbers down and you see the parks really holding it up.
Well, they could do good at a streaming service if they have like exclusivity or whatever, right? You got their streaming service, so let's say you guys see a movie that's coming out in 1 week, but you got to see a week earlier on their streaming service if you're
that's
a subscriber.
See, now that's good marketing, right there.
Exactly. You want to see the new Star Wars movie before everybody else does? Buy a subscription.
Yeah, buy a 1 year subscription.
1 year subscription. You get all the new news that comes out, all the like sneak peeks.
You're thinking, man.
Right?
I wonder if Bob Iger's listening. You might got a job there.
Right? But no, like the streaming service can be good because they have a lot of good IPs now, especially bringing in Fox. So they can make a lot of money.
That was a good point. Right? For the one time you talk every 5 podcasts, you make a pretty good point.
I know. I speak when I need to speak.
When you know about a company.
Yes.
You do know quite a bit about Disney and what's going on there.
Yes, I do.
Yeah, you're a lot more knowledgeable about specific stuff.
I am.
I take a much more broad base and kind of know, you dig in a lot more into, especially things like media, you know quite a bit about that.
I do.
That was good. That was good. That was a nice poignant point you made there.
Yes.
Yeah.
So that's
right on the mark, sir. Yeah, I'm telling you. Knocked the apple right off my head. Kudos to you for bringing the noise.
Continue, sir.
Chipotle Mexican Grill. If you're looking for some good Mexican food, Chipotle. They've had a couple of food issues. Some people getting the farts and stuff.
The fiery farts.
Yeah, you don't want to be eating there and getting that. EPS of $1.34, beat the street by 2 cents. Revenue of $1.11 billion was flat or in line, whatever you want to call it, with the street. But beat the revenue year over year 7.8%. $255.46 to close the week. Chipotle used to be a darling of the stock market. Things have slowed down quite a bit. Comparable store sales plus 0.9% versus a 0.7% estimate. Operating margin up 140 basis points. Costs fell 110 basis points off of the sales price. That isn't bad, but it's not great. Chipotle lagging. You know what?
Yeah.
They were supposed to break out. I don't know. You weren't in the stock market 7 years ago,
no,
6 years. Man, that stock was something else.
Well, it was a big name.
It didn't get the $255 from nothing.
No,
it was roaring. That thing. Why isn't it up in Canada? What's taking the growth so long? Like, they literally seemed like they hit a wall. Like, it was going, it was hot, and then it cooled off.
And their name kind of got run through the mud with all these like food concerns.
There were a few things that were a few things.
I did follow that because I've heard about Chipotle, and then they had
there were a few
bad runs with them or whatever.
Yeah, I'd like to try their food.
I hear it's pretty good.
When it was on its run early in its public time, when it was actually being traded publicly.
The limelight,
yeah, when it was in the limelight straight up, when a new darling on the street, though that happens all the time, and it totally was. It absolutely was. Food was raved about, and like I don't understand what the problem is getting one up here to Edmonton. We've got a West Edmonton Mall.
Come on. Well, there should be definitely one there.
Get a Chipotle in there, right?
Yeah.
I want to eat some of this $255 a share tacos.
Me too.
Yeah, Beazer Homes. So we're following the home builders, much smaller home builder, negative $4.08 on the earnings per share. The estimate was for negative 8 cents. So they obviously took a tax hit there, paying back a bunch of money that they owe. Revenues of $372 million, beat the street's estimate by $7.6 million, and it's up 9.8% year over year in revenue. So small revenue number, $372 million, but beating. And even though that the tax hit obviously took down the EPS numbers, when you look into the actual earnings call, it's very comparable to some of the other companies we've seen, Pulte Homes and KB, a lot of other home builders growing. Home building revenue up 9.4%, sales pace up 10.9%, new home orders up 10.4%, the backlog grew 7.2%. So every number across the board really, really good, including, like we said, the revenue number up 9.8%. Beazer trading at $15.25. I just like comparing. I like home builders as a really good indicator. We're seeing home builders at a lot of levels coming out with good numbers despite the 30-year mortgage rate going up and home builders kind of getting beat down even in spite of the market getting beat down. Home builders doing a really good job. Hasbro really impressed the marketplace this week. I'm not entirely sure why, but we'll get into it. EPS $2.30, beat the street by 50 cents, but I think we were expecting this number already. I'm not sure why it beat by so much.
I don't know.
We know that the big money season was Christmas, right?
Yeah.
Because the revenue number was a lot more realistic. Revenue of $1.6 billion, missed by $120 million, and down 1.8% year over year. So revenue was down. Like, they weren't making crazy margins. I don't know why EPS was way off like that. Analysts need to do a little bit better job every once in a while. Decline in partner brands and European sales. Franchise brand revenue up 11%. Hasbro Gaming down 4%. Partner brands down 21%. Emerging brands down 5%. Operating profit, 17% of sales versus last year when operating profit was 15.7%. So they're up a little bit of operating profit. Yeah. Hasbro trading at 97.73. They went on a bit of a run this week despite what was down. There's a lot of stuff down. They had an earnings call where the CEO came out and said, like, we're really looking forward to the future and we've got all this stuff on the go and we're going to really do all this great, fantastic things. And I thought it was just a lot of like lip service.
Right.
And man, it traded off that lip service big time. Like there was nothing else. There was I saw no real content other than the same thing that you would always said. Like you would drum that up if you looked at your thing and didn't even work for Hasbro and we're like, you got 5 minutes to try to say the best thing you can about this in the most generic way you can to get out of Dodge, right? And he went up there and like literally said like 2018 is going to be a banner year because I said so.
Because I said so.
And I was like,
I'm going to feed you fluff.
And it was just, it went up. Like it went up on that. And I thought the actual underlying numbers are kind of disappointing. So Hasbro had a big EPS beat because the analysts apparently were sleeping. They forgot it was Christmas. They forgot it was Christmas. Michael Kors, EPS, $1.77, beat the street by 48 cents. That's a pretty nice beat. Revenue of $1.44 billion, beat the street by 60 million. Plus 6.7% revenue growth year over year. $59.80 they're trading at the end of the week. Kors brands, though. Kors brand specifically, not Chew, not the luggage brand, not any of the other ones, but just Michael Kors in and of itself, down 4.5% in revenue, and comparable store sales down roughly 5% for Kors. So that brand has taken a beating. While Chew is doing really well, actually. I don't have the numbers for it, but Chew is doing really well. They're renovating about 100 stores in the next 2 years. Asian retail revenue up 18.4%. European revenue up 11.3%. So good double-digit growth. Everywhere else, it's the United States where they're really having trouble. They really kind of flatlined a little bit, and Kors is taking the beating for it. Licensing business up 12.3% as well. So Michael Kors is doing okay, but their flagship brand is really starting to lag a little bit. I don't know if
that's not good.
Maybe ran its course as that kind of. It's not top end. It's not Louis Vuitton.
Right.
But it's that mid. It's the top end of mid range. You know what I mean? It's right up there with.
You think
Coach.
They would be doing pretty good though? That top end mid range. You think that's their sector that would probably be bringing the most money? You would think, right?
And on top of that, that's where like. There's people with money out there right now in the economy. We see it with the parks at Disney.
For sure.
People are spending to go on holidays.
Maybe just their designs are kind of just lagging.
Yeah,
right?
that's
who's ever designing their.
So you got to start thinking, right? It's like when Nike tells you, like we go back to this Lululemon topic, when Nike tells you, hey, these athletic brands aren't selling for us. We can't really get things to sell. Reebok, the athletic brands aren't selling for us. Then you look at Lululemon's comparable store sales, beating estimates, and you go like, maybe your stuff just sucks.
Yeah.
Have you thought about that? Maybe maybe it's garbage. Right? And they're making better things than you. So maybe that's exactly what's going on. Maybe you're 100% right. It's like Coors, while Chew is still doing good, Chew's completely different division. Coors, maybe they just need to do some reimagining. Definitely. Or maybe they've done too much reimagining.
Could be.
Maybe they've stepped too far away from what was considered their core brand.
Maybe.
No pun intended.
Core brand.
Right? Maybe they need to go back and actually do things the right way. They need to get in touch with customers, because when your big brand's down 4.5% in revenue and you're up in revenue 6.7%, it might be time to reevaluate.
Definitely, I think so.
Yeah, might be time to reevaluate. Tesla. Earnings per share, negative $3.04. Beat by 8 cents. So they're expecting nothing out of Tesla. They shot that Roadster into...
They did, with Starman.
God knows where.
Well, they attempted to shoot it to Mars, so it's gonna...
They attempted.
Orbit, yes.
But they missed that by a country mile.
Kind of overshot. So
overshot.
Deep space?
Yeah, it's gone.
It's going. It's not gone yet. Right?
But it's going.
Oh, yeah.
It's not coming back.
It's probably going to take 40 years to leave the solar system. Just kind of like that satellite that
But it's
Voyager.
gone. It's gone. It's gone. It's funny. It's going to take 40 years to do it. 30 years from now, we're going to have technology that'll have something that'll just blow past that, right? Yeah. Like it's standing still. It'll start to become like space junk.
See, this is how I picture it. An alien civilization finally comes to visit us, and the first thing they do when they come from Lightspeed, boom, gets blown up by the Tesla Roadster. That's what I think is going to happen.
That's probably...
Boom, going to war now.
Yeah. That'll be the movie that brings Will Smith back. Yeah, he'll be the guy riding that Tesla Roadster. Yeah. Earnings per share negative $3.04, beat the street by 8 cents. Revenues of $3.29 billion, beat by $10 million, up 44.3% year over year. So revenue growth, obviously. Tesla $310.42. The Model 3 should be up to 2.5 thousand vehicles made a week by the end of quarter one, 5,000 by the end of quarter two. They got $3.4 billion in cash they're sitting on right now. Reservations for cars remain stable. I don't like stable. I want to hear growth. Yes. Stable's the word they use, not great. No. Margins of 13.8%. Versus the 28% margin target number that they're looking for. So margins at about half right now. They say as production picks up, margins will get better. Margins at about half of their own production, or their own projections. Right. So that is not very good. You need to see those margins picked up. Reservations remain stable. Doesn't sound very promising either. So
not stable.
Yeah, Tesla is... People are starting to lose a little bit of faith.
I hear it's stable. It's like you're on your deathbed.
Yeah.
He's stable right now.
Stable right
15 minutes from now, he might be dead.
Say your final goodbyes.
Exactly.
I don't think that's going to happen.
No.
But definitely Tesla losing some favor.
No, that's just the thing that comes to mind.
The flavor of the month that Tesla was for a long time, the darling, is starting to wane, and people want results. Enough over-promising and under-delivering. It's time to get back to work. You can shoot as many roadsters out into oblivion as you want, but you need to actually make some money with this company that turns over products.
Yeah. So maybe spend that money instead of launching that roaster, put it in production.
Yeah, get your eye back on the ball.
Yes.
Take-Two Interactive. So Take-Two Interactive that's Call of Duty, right?
No, that's like Grand Theft Auto.
Grand Theft Auto, that's what it is. Grand Theft Auto. EPS 21 cents versus a 98-cent estimate. Again, that's going to be a tax-related thing. Revenues of $653.9 million, missed by $9.89 million, down 12.2%. So talk a lot about esports. Take-Two Interactive, publicly traded, sitting in that third spot, easily behind EA and Activision Blizzard as far as publicly traded video game developers. Take-Two Interactive, down on revenues, down. This EPS number, not very good. Recurrent customer spending, though, that means customers already spending money, recurring spending more money again, up 64%. What they're spending money on, they must like. Digitally delivered revenue up 8%. Good. So they're making more money. It's just a matter of they need to make more money on newer games, because we know the shelf life of games, it runs its course quick. That Grand Theft Auto game that came out, that's like a year ago now, right?
No, Grand Theft Auto came out in 2013.
The last one.
So like Grand Theft Auto, it takes a long time.
But there's an online version, right?
That's the main thing. So they got like microtransactions. You buy like shark cards, they're called. So you can buy like 10,000, a million, $1 billion, which costs like real world money, right? So that's probably where you're going to see those the gain, right?
So you're seeing, the recurrent customer spending.
That's right there, yes.
So people that are playing are spending more money. And I'm glad you're paying attention to what these video games are doing, because I'm not.
Oh, I played video games for a long time, but so I know how it is.
Yeah, so $108.45 it closed the week at. You need to see that revenue number up more. Recurrent spending, great, but if you only convince the same guys that are there to spend money and you're not bringing anybody new in, and that's what that number looks like to me. Yeah. That the guys you've got are there. Maybe they just feel I've spent so much money here already, I'm almost obligated just to stay. Eventually that might go away as well.
Yes, exactly.
Right? You need to bring in new revenue from outside. And I know Activision, and I know, EA's having a bit of a time, but Activision especially bringing in revenue from outside. Doing a better job of that than Take-Two is. Telus, EPS of 55 cents versus a 53-cent EPS last year, so a 2-cent gain over last year's fourth quarter. Revenue of $3.47 billion, that number's up 5.2% year over year. Telus closed the week at $35.64. Canadian Telecom.
That's right.
Used to be with Telus.
Used to be.
Hate Telus. Hate Telus.
Hate 'em.
Would never go back there.
No, I'm Shaw and Rogers.
Yeah, terrible service. I'm Shaw and Rogers as well. Yeah. Never tried Bell.
Haven't tried Bell, no.
Haven't tried Bell. Or Wind. You ever tried Wind Mobile?
No.
That's Shaw.
Oh, really?
That's Shaw's, no,
I've always been with Rogers every time I've had a cell phone.
Really? Yeah, actually, you know what? I heard about Shaw. Shaw, just speaking of Shaw, I heard about this today. They offered 6,500 of their workforce a buyout, a voluntary buyout, because they're trimming their workforce because they've had so much loss in their legacy business, the cable business,
right,
that they're getting more into Wind Mobile, the actual mobility, the cell phone telecom company. Yeah. They're going to get more into that. So they've offered half of their workforce, 6,500 of them, voluntary buyouts that close on the 14th of February, like next week, where like you have to have made a decision, and they said like, we're going to offer this to you, no guarantees that your job's going to be here if you don't take it. Right. So they're doing significant cutbacks at Shaw, just as we mentioned Telus. Clearly a competitor getting into the mobile, the wireless market. They're in a little bit with Wind now, but they're clearly making a move, significant company direction change to be getting into something a lot more prosperous as cable becomes a lot more passe, and we see numbers down across the board, Comcast, everywhere.
So it just basically threw them the ball, and like, the ball's in your court. You decide what to do.
Yeah, you decide what to do. Choose your own adventure.
Yeah.
Fancy, right?
Choose your own destiny.
Yeah, I wonder if they gave it to him in some nifty font on like a scroll. I wonder what the buyout was.
No doubt. Like, I'm actually curious.
Yeah, like how much was it? Was it?
They didn't announce that. They just said
was
buyout,
it for 2 weeks or was it for 6 months?
6 months, a year.
That's a lot of money to be putting out, regardless of what it is, to be basically losing a workforce and putting out all that extra money. So who knows? But that's just as an aside, as we're talking about.
No, that's pretty
Telus.
interesting.
Yeah.
Right?
So postpaid. Let's go back to Telus.
All right.
We'll go back to Telus here and talk about Telus. Postpaid wireless net adds up 39%. Really good number for Telus. Overall customer adds across all platforms. That's wireless, internet, and television up 23%. Telus actually a really good company. I left Telus. It was bad customer service that I dealt with. It wasn't a bad company as a whole. It's actually a really strong telecom company. They get stronger every year. They do a really good job over at Telus. A lot of companies are up. Cell phone telecom companies are up from that last quarter in Canada because they had a deal around like Boxing Day. Do you remember that deal where nobody could get through and there was all the... there's the sneeze. There's the sneeze. We had this sneeze. It was stuck to...
Demon be gone.
Get it out of your system. We had this deal around, I believe it was around Boxing Day, and every telecom company up here had it. Bell, Rogers, Telus, and it was amazing. 10 gigabytes for like $65 on a limited plan. Then they had to extend the deals for days because people couldn't get through. They
tried it for hours.
Crashed all the networks and stuff. So you can only imagine that a lot of these companies have really re-upped their net postpaid ads. Big time. Big time.
Definitely.
Yes. Earnings still, KKR, investment company, big time. They're invested in a whole bunch of different stuff, invested all over the board, private equity. KKR earnings per share of 48 cents. That missed by 4 cents. $405 million in revenue, beat by $44 million, but that revenue number up 58.3% year over year. That's a big revenue beat. That's why I put it on here. KKR actually in a lot of deals that people don't know as a secondary or a third party putting money into deals. KKR's in a lot of stuff, and if you pay attention to a lot of different acquisitions that go on, a lot of different funding projects, you'll notice KKR is invested in a lot of different things. 21.19 to close the week. Assets under management last year grew 30% at KKR. They had over $18 billion deployed in the marketplace in 2017. Their gross returns at private equity, 34%. For real assets, real estate, 12%. Infrastructure, 15%. Energy, income, and growth, 9%. And all three of their different lending segments rounded out to be about 15% growth there as well. So KKR grow, lots of growth, lots of double-digit growth everywhere except for the one that was 9%. So big time growth over at KKR. CVS in the process of buying Aetna, we know that. CVS earnings per share of $1.92 beat the street by 3 cents. $44.39 billion, beat the street by $850 million, up 5.3% year over year. $69.39 CVS. I don't have any of the particulars. They're selling a bunch of drugs. They're doing front end and back end to all the drugstore stuff. They're bringing in Aetna, which is going to bring in a whole bunch of clients that are going to have drug plans that are going to do their stuff over at CVS. They're probably going to get some good deals at the pharmacy. Oh, definitely. CVS and Aetna. Once that deal goes through, I can only imagine that's going to really start bringing the pharmaceutical industry, insurance industry, as a lot more conglomeration has to take place. You know, like if the idea that a company like Amazon gets into it, what if Amazon buys an insurance company? I mean, what are you going to do then, right? So you've got a lot of companies out there that are exposed by being invested in one thing heavily and not being branched out enough. CVS and Aetna really branches those two companies out because a lot of loyalty between those two companies as far as their customers go, and it's going to bring that loyalty across borders into both of those companies. So that was a really good deal, I thought, that happened there late fall, early winter of last year. Twitter, 19 cents a share. This was a darling of the street this week. As the markets fell, people loved Twitter. Beat the street by 5 cents. $732 million in revenue, up, beat the street by $45.9 million, and that revenue number is up 2.1% year over year. 31.51. It's the first time achieving GAAP profitability ever. So GAAP is obviously a much more accounting strict way of checking your earnings per share. It's really getting into the actual accounting practices a lot more deep and not allowing for some exclusions that you're otherwise allowed, which are fine. Those exclusions are fine. They're allowed to be in there on purpose because you're balancing for a company that's got big structure over the course of a long time, and you know that you're balancing things out the right way if you're doing it properly, obviously. And most companies are, but GAAP is a lot more strict. So when you're looking at that EPS GAAP number, that's the first time having actual profitability is big, considering the user base is flat at Twitter. 330 million flat, no gain at all.
No gain.
So no gains at Twitter, beat by 5 cents on the EPS. The rev's up 2.1%. People loved it though. Twitter had a great week. Yum Brands.
Yum.
Delicious, right? Delicious. You know, Yum Brands, Pizza Hut, Taco Bell.
My favorite pizza is Pizza Hut.
Is it any good? I don't think I've ever been there.
I've been buying stuffed crust for about 20 years now. Every time I do get Pizza Hut, the best pizza I've ever eaten in my life.
Best pizza you've eaten in your life.
In my life, to me, anyways, without any toppings, because like.
Is this since Yum Brands took over? Because Pizza Hut used to be Pepsi.
That's very true. This is back in like the 90s when the stuff first came
how old are you? What are you, 65? What do you mean you've been eating pizza for 20 years? It's the best you ever had, and we're talking about something that happened 20 years ago. How old are you?
No. To this day, they seem like the same, right?
Really? Yeah, is it the same?
It tastes exactly the same.
I guess there would be quality
It's like taste my childhood. It's
really,
so good. Oh, yeah.
Really, a taste of your childhood.
Oh, it's so good.
Delicious. That sounds good. So that's KFC, Pizza Hut, and Taco Bell, the slowest drive-thrus in the world of drive-thru.
Yes.
If you wanna really find a good song to listen to on YouTube in your car, You have all the time in the world and drive through a Taco Bell.
Definitely.
And then you'll have all the time on the toilet afterwards to continue to 96 cents at Yum Brands, beat the street by 16 cents. $1.58 billion, missed by 10 million, down 16.4%. So people are sick of being on the toilet, apparently. Down significantly. 79.31 closed the week. Same store sales down 0.3% in January. Traffic down 3%. Average guest check, though, up 3%. So the people that are there that don't get the horrendous bowel movements from Taco Bell are willing to spend more.
Yes.
But everybody else has decided to move on to something a little more friendly and some really soft 2-ply. Taco Bell, KFC, speed up those drive-thrus. Honestly.
Definitely, yes.
You drive up to those drive-thrus, they have the fake guy talk to you. The fake guy's like, oh, hello there, welcome to Taco Bell.
Yeah.
You should think about trying our thing. And then the other guy gets on, the real guy, and he's like, can you just hold on for a minute? And he doesn't come back for 10 minutes.
No, he just leaves you hanging there.
What's he doing? He went on break?
Yeah, he did. You just sit there, you're sitting by, he comes up by the door, smoking, you're like, I just talked to you.
Jeez. Philip Morris, speaking of smokes, Philip Morris, $1.31, missed by 4 cents because smoking's bad.
It is.
$8.29 billion because smoking's profitable. Beat by $140 million. And that number's up 18.9% year over year because smoking's profitable. And it's flavor country. It's delicious.
Yeah. It's
right?
flavor country.
Let's all have a cigarette. Why not? $99.94 to close out the week. Cigarette volume, so that's the amount of cigarettes, down 2.1%, down 4% in Asia as Asians apparently hate smoking. Up 1.5% in Europe as Europeans apparently they're getting on the smoking bandwagon.
Oh yeah.
Why not? Right?
Yeah.
It's 2018. It's time to embrace something. You can't just be eating all these baguettes wearing wooden shoes. It's time to get on
that's the first thing that popped in my mind is like some French dude smoking and holding a baguette. As soon as you said that, I was like, he read my mind.
Well, there you go. I am a mind reader. They're having great performance from their smokeless products, IQOS. That's doing really well for Philip Morris. Philip Morris, it's obviously doing really well, up 18.9% in revenue. Smoking is profitable. You kill people and you get new customers. It's a ridiculous. How did they develop this revolving door of a business?
It's a circle of life.
It's an unbelievable business, right?
It is.
They just slaughter their customers at the end of the ball game, and then new guys sign up. I'll give you $12 a day. Yeah. I'll give it to you. 12 bucks a day. 12 bucks a day for this abject death. Cardinal Health. Trying to save your life when you decided to smoke. Shouldn't have, but Cardinal Health, just like United Health, the big players in the health insurance industry down in the United States, $1.31 billion or $1.31 EPS. Holy get it together! Beat the street by 16 cents, 35.1. I knew I was wrong when I said 1 point. It said billion because I know they make way more than that. 35.19 billion. Beat the street by 540 million. That's up 6.2% year over year. 66.72. Cardinal Health Pharmaceuticals plus 5%. Medical plus 19%. They barely make a profit on the pharmaceuticals. It's like a 1% margin. They make 38% profit on the medical, and medical up 19%. Cardinal Health, they're winning like usual. It's a given. Cardinal, United, you see all these companies, they just do so well in these up markets, down markets, that the healthcare industry is it's a pretty good store of money. People seem to like getting sick. Between the Taco Bell and the Philip Morris, it's almost a given, right?
It is.
It's almost a given. T-Mobile, 48 cents, beat the street by 11, 10.76 billion, missed by 70 million. That number's up 5.2% year over year on revenue, 59.20. They closed the week. Total net adds up 1.9 million. Postpaid churn down 10 basis points to 1.18%. So it's good to see the churn down. Net adds continue to go up for T-Mobile, even though they missed on the rev estimate. It was a really, really small miss. Revenues of 10.76 billion and service revenues inside that revenue number of 7.76 billion are both records for T-Mobile.
Oh, right on.
So both records, the overall rev number and the services rev number inside that rev number, both records. Free cash flow up 53% to 1.1 billion. T-Mobile, they are going to pass Sprint at some point. I mean, it's just a matter of time, it seems like.
I think so.
It's a matter of time until they get a lot of those gifts that they've got removed, where they're allowed to do a lot more aggressive advertising.
That's right.
Letting people know about the downfalls of being with AT&T or Verizon and not being with T-Mobile. They're going to get what is that? The FCC. The FCC is giving them.
They need to have those commercials like they did in like the early '90s with like a Nintendo and Genesis.
Yeah.
Genesis does what Nintendo don't.
That's very true.
They need like those.
You did play a lot of video games.
I did.
You know, video games and pizza.
Video game, pizza, yes. And
if we covered some beer companies,
for sure. Yeah, sneak that in there too.
The WWE. Yeah. 20 cents on the EPS number, beat the street by 1. 211 million rev, beat by 3 million, up 8.6%. 34.84. The WWE Network subs up 8%. They're the number 1 YouTube sports channel. They have been forever. They're the number 2 all-time channel on YouTube with only over 20 billion views. Wow. Have been forever. Social and digital platforms up 16% to 20 billion views. The first time they've ever crossed 20 billion views on their social and digital platforms in a year.
Wow.
As long as Vince McMahon doesn't go spend all his time at the XFL and they get run properly, WWE, maybe a little overpriced right now, still solid company, niche market, but they hold a viewership really strong. The people that are dedicated, very dedicated. I'm one of those, very dedicated, spend a lot of money. WWE, it is what it is. BCE or Bell. So we're covering Bell. We covered Telus already. Earnings $684 million. That's up 2.5% year over year. Revenues of $5.958 billion, up 4.6% year over year. They close the week at 4439. Customer connections across all services up 5.5%. Wireless postpaid net adds up 175,000, so nowhere near what Telus was, but still pretty good. Bell Wireless up 9.9%. Bell Wireline up 2.7%. And Bell Media down 1.3%. Bell is definitely behind Rogers.
Oh, for sure.
They're in the meat of the pack there. They're with Telus, but they're not. I see Telus making a lot more forward headway, and I see Bell doing a lot more water treading. But Bell was really extended out into that satellite stuff, and
that's right. Yeah,
that stuff is dying a slow death. So as Bell transitions into much more wireless, like the provider.
Need, yes.
Yeah, that's
get with the times, Bell.
Yeah, then they are. They absolutely are. Activision Blizzard 45 cents versus an estimate of 93 cents. Again, tax issue. $2.64 billion. Beat by 90 million, up 7.8%, 67.08 for Activision Blizzard. Good company, right? Obviously leading that market space. Them and EA, I think, are way out in front. There's not really a lot of competition right at that top end there. Those two are. It's almost a monopoly they've just created. They didn't even buy up a bunch of companies. I mean, obviously, Activision and Blizzard got together years ago, but these companies haven't bought up really anybody in a long time.
Activision's been around for like 30 years. Right?
Absolutely, right? Blizzard's been around a long time, too.
That's right.
Net bookings, a record for 2017 is $7.16 billion. So they're killing it. They're killing it. It's a record. Product sales up 5.9%. 385 million active monthly users. Players spent 50 minutes a day on average on Activision King, which is the mobile stuff, and Blizzard games. So people are spending their time on there. These are all records. Yes. Activision, way better than Take-Two Entertainment.
Oh, for sure.
Yeah, or Interactive, whatever. Way better. Way better. The price is still high for the PDE, but Activision Blizzard, really good company. Nvidia, this was an earnings call. We talk about a company like Amazon touching into many spheres. This company used to be so pigeonholed into just graphics. Nvidia, $1.72, beat by 56 cents. 2.91 billion, beat by 230 million. That number's up 34% revenue year over year. This is a company that's been established for a long time.
Yeah.
For them to be jumping revenue numbers like this, they're moving up in market space, in the actual sectors that they're in, and they're in a lot of sectors now. They are moving up in the margin of that sector significantly in every sector. Nvidia is killing it. Their CES presentation was the best presentation by so far. Nvidia is killing it. GPU up 33%. Tegra processors up 75%. Gaming up 29%. Professional visualization up 13%. Data center up 105%. Automotive, because we know they're in autonomous vehicles, right? Up 3%. And OEM and IP up 2%. They are up. And they have been up for a long time. They continue to go. Nvidia is a company worth looking into. If you're not in the semiconductor tech sector. I mean, I know Nvidia's run for a long time. I
heard the new processor's pretty good. What was it called again?
The Tegra stuff?
Tegra stuff, yeah.
Dude,
I heard
that stuff
really
is supposed
good.
to be so good.
Yes.
So good. Check the CES presentation.
I watched a couple of reviews on it.
It was like 15 minutes, and they go through all this, and that guy that did it was excellent. I think he's a CEO. It was excellent stuff. Finally, Great-West Life Insurance Company up here in Canada. EPS 39 cents. Revenues of $30.3 billion, up 13% year over year. Great-West Life, it's a good business to be in. Insurance business. People are dying all the time. But with medical science the way it is now, we can keep people alive much longer and hope their term runs out. And you just bank that dough. Yeah. Great-West Life. Earnings next week. Blue Apron, Molson Coors, Cisco, and a few others, but not much, as earnings start to wane low. This was episode number 16. I think we did a pretty good job.
We did.
What do you think?
This was a fun one, I thought.
This was a good one.
Yeah,
we always have a really good time.
I had a hoot.
Yeah, you had a sneeze, a bunch of stuff.
Yeah, I had a little Tourette's going on there with that sneeze.
I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
We'll catch you next Sunday. Have a good time in the tumultuous markets out there. Try not to catch any falling knives. We'll see you next week.
Or wooden nickels.